One big winner in the staples category today was Helen of Troy. George Tsilis taking a look at maybe a comeback story after last earnings. They got beat up. GT, what changed this time around?
Well, I think there's a pivot happening here with sales, OG, to be honest with you. And for those who don't know, I think we've talked about this company at least once in the past few years, but it's essentially a household products and appliance company, but they also have, a beauty and wellness division. So, things like luggage and housewares, utensils, kitchen appliances, food storage. They also serve the beauty and wellness markets as well as sell things like health products like blood pressure monitoring and even water filtration. Some of the products or the brands that they actually have include OXO, which you see at the Bath and Body Works, or I'm sorry, the Bed Bath and Beyond's out there, utensils and food storage, but also Pure, those water filters, and essentially Hydro Flask. Those are again tumblers and consumer beverage holders that you've probably seen. So anyway, they do sell, a lot of different products out there. But if you look at what's been going on since even 5 years back, the stock was trading, over $250. And essentially in 2021, their revenue growth and net income growth actually peaked, and it's just been a downtrend since then. But overall, I think this is looking trending or looking to potentially reverse a trend going forward. Now, I'll explain in a sec, but if you consider the move today, it was actually quite good. They bested the earnings per share as well as sales. They posted $1.21 versus $1.08 in profits on an adjusted basis. That was 30% lower, however, than last year at $1.74. If you look at sales, it came in around $474 million. They were still down about 3.3% versus the 457 estimate. And again, compared to $491 million for the same quarter last year. So sales was down 3.5%, earnings was down 30%. Even adjusted, operating margins were down about 300 basis points, but the stock reversed. It flipped to the upside. And I think it has to do with the fact that the company did provide some free cash flow visibility at the midpoint. They guided for about $190 million this fiscal year. And if you look at the net income of the business in the last 4 quarters, excluding the one they just reported, they generated $152 million. So it appears that they are demonstrating to institutional holders in Wall Street that their free cash flow metrics are improving faster than net income. And that typically bodes well for a potential reversal in business conditions.
Okay. So, George, their items are generally, staples, basics in nature, but they go up. Like there's a spectrum here. So among the staples, there's some discretionary items for sure.
Oh, for sure. Yeah. So, if you think about the challenges, let me just explain some of the challenges. Look, in 2020, 2021, there was a lot of moving going on. So the demand for household, appliances and housewares and home goods, outdoor, products was high. But when you have new household formation, new existing home sales and new home sales down in terms of the trends, because there's a shortage of housing and high interest rates have really trapped folks in their homes with low interest rates, you don't see a lot of churn or purchases of new utensils. And these are, again, products you buy once and you don't necessarily buy ever again in some cases. So they need growth in household formation to grow their business. A lot of their products don't have high replacement rates. Maybe some of those Pure water filters, for example, well, you'll continue to purchase those because they exhaust their use. But nonetheless, I think those are some challenges the company faced. I think if you look at the projections for 2025, I think with the beat in this quarter, which is their fiscal Q2, they were expecting resumption of revenue growth in Q1 of 2025. So I think they moved that up a little bit, and that's why we're seeing essentially the stock price react positively. But also there was about 9% short interest based on yesterday's close. That could also, cause the stock price to move in the double digits because of that high short interest. So you basically have a company that's been profitable this entire time, even though the stock has been down significantly off those $250 highs back in late 2021. But the profit growth and revenue growth just haven't been there. They've been contracting. So price is moving in the wrong direction for investors. But it looks like that may turn a corner, is what I'm trying to say here in Q1 of 2025. And that might have accelerated or come up faster, for lack of a better word, with this quarter print where they printed some better than expected sales and earnings growth. So even the number, if you look at it, was about 3.5% down year over year. For the remainder of this year, the estimates were down 2.5% with the resumption of positive revenue growth in 2025.
Okay. So it's maybe turning a corner here, picking it up with some growth and nice rally, 18%. I mean, obviously impressive. Market found it to be quite an impressive report. Thanks for digging for us, George. Nice find, winner on the session.